You could be getting double taxed on your restricted stock units when you sell them. In today's video, I'm going to show you exactly how to avoid being double taxed on your RSUs, and even going back to a couple of years of previous tax returns and seeing how you might be able to look to see if you were double taxed and how to potentially get some money back in your pocket. And I found this mistake on many tax returns that's resulted in thousands of tax savings. And I know what you might be thinking. I have a CPA or tax professional who files my returns. It has to be done right. Well, unfortunately, that's not always the case. I've seen this mistake made by tax professionals and, of course, folks that self-file their tax returns. So let's jump in to show you exactly what to look for so you can avoid this mistake of being double taxed on your restricted stock units. Hi, I'm Travis Gansmeyer, founder and financial planner at Kinetics Financial Planning. So before we jump into the meat of this video, let's briefly talk about how RSUs are taxed, because that's going to help you understand how this double tax actually occurs. So let's just pretend you get $120,000 of restricted stock units each year that vest. Now, upon the vesting of these RSUs, you pay ordinary income tax. So that's subject to federal tax, state tax, Medicare, Social Security, just like your normal income. And that $120,000 is very important because that actually becomes the cost basis. So almost think of it, if your company gave you $120,000 of cash instead of stock, but you took that cash and bought shares with it, that would be your cost basis. That's what it costs you to buy that stock. And then finally, once you go to sell those shares, if the stock has gone up in value, you'll pay capital gains above the basis. Or if you sell it for lower than the price of that stock cost basis, you'll actually have a loss on those shares. So now that we've covered the basic taxes of RSUs, let's look at how the double tax can occur, or essentially how you could pay tax twice on RSUs and not even know it. And this double taxation occurs in the way that the brokerage firm, this is where you the brokerage firm that you sell your stock at, they're going to report this on what's called a 1099-B. And the double tax can occur in how they report this. So we're going to bring up an actual 1099-B and show you how this happens using the same numbers as we just covered in our example of how RSUs are taxed. So I've already marked this up just so you can kind of follow along. But as you can see here, the $121,000 represents the amount of stock we sold. Now, remember, I said $120,000 invested, but $121,000 is the proceed. That's simply because usually by the time you sell RSUs, there's going to be a small gain or loss. Could be a big gain if you've held on to it for many years. And if you sell the stock immediately, it's going to have a minimal gain or loss. But in this situation, $121,000 of stock was sold. That's what the proceeds were from that sale. And then the cost basis is $0. So this is what should bring up a little bit of a red flag, because remember when I mentioned the basis should be $120,000. So this is where the double tax would occur because you've already paid tax on the $120,000. So if you were to report $0 as your cost basis, what's going to happen is you're going to pay tax twice. You've already paid tax on the RSU income. And if you report a $0 basis on your taxes, which is commonly done, then you're going to report $121,000 of realized gains. That means you're going to be taxed on $120,000 and $121,000, ultimately doubling the amount that you're taxed on from this RSU sale. If this person here is in the 35% tax bracket, that's actually $40,000 of additional taxes they would pay. So how do we avoid this double taxation, and what do you need to look for and even supply your tax person or utilize whenever you're doing your own tax return? So the key thing to look for with RSU sales, especially, and even things like ESPP, employee stock purchase plan sales, is you always want to look for what's called the supplemental document. Now, this could be at the end of your 1099-B, or it's going to be in your brokerage portal. Just always know that you need to look for the supplemental information. Here's the 2023 supplemental information for the same stock sales. Now, as you can see here, we have some similar information. We still have the value of stock sold down here, $121,000. But remember, $120,000 of that, or the cost basis, we already have paid tax on. And as you can see, that lines up with what is reported in the supplemental document. So ordinary income here, $120,000, which also means our cost basis is $120,000. And this has already been taxed. So what that means is over here, you'll see that $1,000 should be reported, not $121,000 like the 1099-B says. So if you're not using the supplemental information, you're going to double pay this tax. And again, that's going to result in over $40,000 of additional taxes for someone in the 35% bracket, given this information. That's basically it. And that's how RSUs are commonly double taxed. the higher your RSU income, the more magnified this mistake can be. What can you do to avoid this? Well, one, as we just talked about, look for the supplemental information. And then what you really need to look for is that $0 basis. And then in previous tax years, I'm going to show you how you can quickly go back and look and see if you were double taxed, or at least something that may throw up a flag for you to go ask some questions about. Pull up last year's tax return or the last couple of years tax return, and you're going to need the full PDF, and scroll down to form 8949. And this is going to show your stock sales. If you see a $0 basis and a zero adjustment, that's immediately going to say something may not be right, because very rarely are you able to acquire a stock or something for $0. You'll usually see this whenever the 1099B was used and not the supplemental documents that show the adjusted basis. So hopefully that helps you avoid the double taxation RSUs, or even maybe get some money back in your pocket from previous years.